Hi, my name is Mubarak, and in my last video, I discussed transfer pricing. And if you haven't watched that video, kindly go watch it. The link to the video will be in the description of this one. So, like on that video, a friend of mine said, "Why did I give just one example that I know I can use? The way I can use. So I should give more example." So, and as I said in the video, that transfer pricing was asked November 2025 diet and May 2026 diet and some other past diet too. But like those are the two I can recall. November 2025, we've already solved the question on that, so you can check it out in the previous video. For now, in this video, I'm taking you through May 2026 video. So now, the first question they asked is, what is an optimal transfer price? See, let me explain something here. When after I wrote my this exam, this was the diet I wrote for skills and I passed. When I saw this question, I think we did the exam on this paper, we wrote it on Wednesday, but on Sunday I already solved November 2025 diet. And as soon as I saw this question, I was just thinking of the way they answered November 2025 diet, and that was how I gave them the answers. So like when they asked what is an optimal transfer pricing, you remember that in that November, the first thing they asked was the price range, and I just wrote that down. But when I got out of the exam hall, people were like, it was the definition of transfer pricing they were asking for. So I thought I had gotten it wrong. But now when the ICAN solution came out, I realized that it is like what I did exactly. So it's the price range that they were asking in this question. So let's read the question and we'll solve it. Offerman Nigeria Limited has two operating divisions, Lagos Division and Enugu Division, that are treated as profit centers for the purpose of performance reporting. Lagos Division makes two products, GAT-R and MAT-R. GAT-R is sold to an external customer for 620 naira per unit. MAT-R is a part finished item that is sold only to Enugu Division. Enugu Division can obtain part finished item from either the Lagos Division or from an external supplier. The external supplier charges a price of 550 naira per unit. I'm sorry, I'm having cough. The production capacity of Lagos Division is measured in total units of output of GAT-R and MAT-R. Each unit requires the same direct labor time. The costs of production in Lagos Division are as follows, as you can see. So now, if you didn't watch the last video, let me quickly do a brief summary of transfer pricing. So in the last video, we said transfer pricing is the price charged when one division of a company transfer goods or services to another division within the same company. So in transfer pricing, we have two divisions, the selling division and the buying division. So like I gave three scenarios for when you want to determine your optimal transfer price. I said scenario one, selling only to the buying division. When they are selling, like when the selling division is selling only to the buying division, then the transfer price will be transferred at the variable cost. The scenario two, selling to the buying division an external supplier and there is spare capacity. When there is spare capacity, and definitely the transfer price is still the variable cost. Then scenario 3, I said selling to the buying division an external customer and there is no spare capacity, then the transfer price will be the variable cost plus the opportunity cost or contribution loss. And I said the contribution loss in particular is the selling price minus the variable cost. So I gave a key point. I said if there are no external customers, there is no opportunity cost. So the transfer price remains the variable cost. Opportunity cost only arises when an internal transfer price causes the company to lose an external sale. I actually advise you to go back to that first video because I actually explained this, what they mean. Like selling only to the buying division is like when they are selling just to the buying division, the internal buying division. So the transfer price is variable cost. Selling to the buying division and external customers, but there is spare capacity. Since there is spare capacity, they can produce all they need to be produced. So there is no opportunity cost. There is no contribution loss. So the transfer price is still the variable cost. But when there is no spare capacity, definitely there will be opportunity cost. Contribution will be lost. So the transfer price will not be the variable cost alone. It will be the variable cost plus the contribution loss. Note, the company will always prioritize internal sales before external. And one thing I did not say in my last video, I was just saying variable cost, variable cost, variable cost. But when I check the way they answer the questions in the Pathfinder, you always say variable cost less any cost due to internal sales. So any cost savings due to internal sales like advertisement cost, transportation cost, packaging cost, and the likes. So now let's go back to the question. So now the question, Ofoma Nigeria Limited has two operating division, Lagos Division and Enugu Division, that they are treated as profit centers for the purpose of performance reporting. Lagos Division makes two products, GAT-R and MAT-R. GAT-R is sold to external customers for 620 naira per unit. MAT-R is sold to a part finished item that is sold only to Enugu Division. Enugu Division can obtain the part finished item from either Lagos Division or from an external supplier. The external supplier charges a price of 550 naira per unit. The production capacity of Lagos Division is measured in total units of output of MAT-R and GAT-R. Each unit requires the same direct labor time. The costs of production in Lagos Division are as follows. They gave us. They now said, what is an optimal transfer price? So what they're asking here is the price range. So now the price range will be, since they are selling only to the buying division, which is scenario 1, definitely it will be transferred at the variable cost, which is 480. But now they're asking for the price range. They also said the Enugu division can obtain the part finished item from either Lagos division, which like from the buying division, or from an external supplier, and the external price is 550. So now the minimum amount they can get it from the internal is 480, while the maximum is 550. So the price range is from 480 to 550. So the second question, what will be the optimal transfer price for MAT-R if there is spare capacity in Lagos division? Now there is spare capacity in Lagos division. So that is for scenario 2. When there is spare capacity, no contribution will be lost. So the transfer price will still be the variable cost. It will be transferred at the variable cost. And the variable cost in this condition is still, what is it called? It's still, the variable cost in this is still 480 naira, sorry. And the last one now, they are saying what would be the optimal transfer price for MAT-R if Lagos division is operating at full capacity due to the limited availability of labor and there is unsatisfied external demand for GAT-R. So now, they said the optimal transfer price if they are operating at full capacity and there is a limited availability of labor, there is no spare capacity, scenario 3, and there is unsatisfied demand, external demand for GAT-R. So the external demand that was not satisfied was GAT-R. So the contribution loss to be on GAT-R. I know our contribution loss is our selling price when I was minus our variable cost. Let me show you. I think it's in the note here. The note will be in the description, don't worry. Contribution loss is equal to selling price minus our variable cost, as you can see. So if you come back to the question, the selling price of GAT-R is 620 naira per unit, while the variable cost is 460. If you press 620 minus 460 in your calculator, you'll be having 160 naira per unit. Now, for MAT-R, since they are operating at there is unsatisfied demand, the transfer price will be the variable cost plus the contribution loss, and the contribution loss is 160. Our variable cost is 480. So 480 plus 160, that will be 640, and that's that. The last one, they said discuss two methods that can be used to evaluate performance of division that operate as investment centers. The two methods is ROI and residual income. ROI is return on investment, while residual income, RI is residual income. So like in another video I'll be explaining those. I haven't explained ROI and residual income. So let's just see the way they answered theirs. Let's see how they answered it here. I'm coming. So now question 4, this is it. They said the A part where they asked what is an optimal transfer price. They said the optimal transfer price or price range. So they said since the only customer of MAT-R is Enugu division, the minimum transfer price will be set at the marginal cost less any cost due to internal sales. So this less any cost, when you write variable cost less any cost due to internal sales, the main reason I'm like intensifying efforts in, because I didn't add it in the previous video, the main reason why I'm intensifying that you should add it is so that you can get your full mark, and so that whenever you have a question that involves what's it called, cost savings due to internal sales, you less it. The variable cost per unit of product mat R is 480, hence the minimum transfer price will be set at 480 naira per unit. The maximum transfer price is 550, which is the price which the external supplier charges, and the optimal transfer price will lie between the minimum of 480 and the maximum of 550, just like I said. B. Optimal transfer price for product B if there is spare capacity. If Lagos division has spare capacity, then the units of product mat R have no opportunity cost. You know, I said that when there is no spare capacity, the opportunity cost, there will not be. The opportunity cost will be zero, and the transfer and would be transferred to Enugu as variable cost less any cost due to internal sales. You can see that they add it again, less any cost due to internal sales. The transfer price would therefore be 480 naira per unit. The last one, they said the optimal transfer price for mat R if Lagos division operates at full capacity. I'm sorry. If Lagos division is at full capacity and will forego sales of GAT R to supply products MAT R to Enugu division, then the unit of the product MAT R would be transferred at marginal cost C. Inside transfer pricing, your marginal cost is equal to your variable cost. So when they are saying marginal cost, they are still saying variable cost here. Will be transferred at the marginal cost less any cost savings plus the contribution forgone on sales. So now the contribution per unit, just like I said 620, the selling price minus 460. If you press it in your calculator, you have 160. Thus, the optimal transfer price will be the 480 plus 160, which gives us the 640, as I said earlier. So now, if you actually didn't watch the previous video and you watch this one and you still feel like you don't really understand transfer pricing, I know I tried to like recap, but like my recap was briefer than the way I explained the last one, because like I actually explained, I think I explained this one better, but I explained that one deeper. So like you can go watch that video, the first video. The link will be in the description to this one. So go check it out. It will actually help you. And also you can just watch the workings we did on, though I actually explained it in my mouth, because for now I don't have someone to like help me hold the camera. So don't worry, I'm working on that. I'm going to get someone to help me soon. So like just you know, watch the videos and share it with people that you know will need this, your friends, that your colleagues, writing skills, writing performance management. Just know that any question you have on ICAN, any question, be it calculation, once it's calculation, drop it in the comment section. Whenever I'm having what's it called, whenever I'm free, I'll make a video on it. So make sure you subscribe to like always get notified when I drop a new video. So about the tutorial note, this note, in the last video I added it to the description, and I'm going to add it again. But once you click the link, it will actually send a request to me, which I'll have to accept before you can access it. And you can only access it to like view. You can't edit it. If you click editor, I'm not going to like give you access. So once this is done, you can just check out this note whenever you're trying to solve any question. It is these same 3 scenarios that you'll be asking. It's just that the English and everything might be twisted and somehow. But once you know these 3 scenarios, definitely transfer pricing will be like something very easy for you. So like I'll be adding this last one to the video, this last example to the note, so that you can see the solution, access the question. Thank you very much for watching. Please share this video, please. Thank you very much, and I'll see you in the next video.